Hi all, and welcome to our session on class trust. I hope you're all safe and well. My name is Angelique, and I am a Senior Analyst at Class, and I am very excited and honoured to talk to you today about our brand new Class Trust products. I'll take you through an overview of the market first, before going through the problems and challenges that exist today, the changing client contracts, what the Class Trust solution looks like, and its key features. So let's make a start.
Trust administration deserves a simple, automated solution. Introducing Class Trust, the future of trust accounting. An industry-first business cloud solution. Empowering you to automate your daily administration. Supporting discretionary and including family trusts and unit trusts. Let's explore more of the powerful features that will save you time. 200 plus data feeds and auto-journaling of income, capital gains and distributions mitigates the human error risk of manual data entry. The beneficiary distribution can often be complex and frustrating, but with Class Trust, you can now make real-time informed decisions. Access up-to-date information on your client's trust portfolios. Standardise your process of administering family trusts, improve client service levels, and help your business deliver high-impact results. Integrated with Class's award-winning product suite, Class Trust is the software solution for successful trust accounting. Discover how it works and book a demo today.
As most of you are aware, self-managed super funds have long played a role in the business models of many accounting firms. With their complex rules and requirements, investors have naturally sought expert advice from accountants and other advisors in order to navigate through their SMSF obligations and to get the most from their investments. But there are early signs that the booming SMSF market is beginning to slow, with data showing a gradual, consistent decrease in the number of new funds being established. Some hold the view that this change of pace reflects a maturing market, as the initial group of investors to establish funds have been exhausted and the next generation are yet to accumulate asset levels suitable for an SMSF. But another major factor shaping the SMSF trajectory is the constantly changing regulatory environment surrounding super. On the one hand, current legislation before Parliament to increase the number of members permitted in an SMSF from 4 to 6, it might help bolster the sector as close friends or family members and business associates pool their money to buy joint assets and build wealth. But on the other hand, significant cuts to both concessional and non-concessional contribution caps have made it harder to accumulate assets in super. And what we're seeing is that many clients are now seeking other options to manage their wealth effectively. With these changes in the superannuation policy and the estimated $3.5 trillion of wealth that is set to be transferred from the baby boomer generation to their beneficiaries in the next 20 years, industry experts expect the number of trusts to grow in years to come. The trusts are nothing new to accountants or business advisors. For years, they've been the vehicle of choice for a wide range of tasks, from running a business to buying shares and property, to being an integral part of a well-crafted estate plan. The benefits they offer for managing income and capital flow, as well as tax effectiveness, are widely accepted. So it's no surprise that there are already approximately 1 million trusts operating in Australia. And more than half of these are estimated to be investment trusts. It's Australia's most popular investment vehicle after super. Accountants we have spoken to agree that super will remain the first port of call for accumulating wealth for retirement, thanks to the clear tax advantages that exist. But with the superannuation contribution limits now in place, wealthier clients are turning to trust as an alternative way to invest their money. Plus, an advantage of trust over super is that clients can access assets before retirement, giving them that greater flexibility in how they use their money. We are seeing that incorporating trust alongside an SMSF is giving rise to a dual investment approach. But for many firms, trust can be an administrative pain point thanks to clunky processes, a lot of manual data input, and a lack of consistency. Research shows that many accountants are battling with some key challenges, which really limit their capacity to deliver an efficient and quality service. The words most used by accountants to describe their experience of trust management are time-consuming, disjointed, inefficient, and error-prone. These comments, along with the data from our survey, really speak to an inefficient approach to trust management. And to be able to capitalize on the trust opportunity, accountants really need to be able to build a compelling service that delivers efficiency and value to clients, and of course, a reasonable revenue margin to their practice. A closer look at the day-to-day frustrations of trust management reveals accountants are using a piecemeal approach with a combination of various systems, and most of the time is spent on Microsoft Excel and non-investment ledger systems. The first key challenge is obtaining the required information, which is also hindered by often not knowing what assets the trust actually has, as this data is generally not in a central place. With at most a bank feed, a lot of source documents like holding statements and dividend statements all still need to be collected. And if a trust sold a parcel of BHP shares in the period and they were bought 15 years ago, then a painstaking journey down a rabbit hole can be added to your WIP. The reconciliation of income and capital gains is mostly done on those Excel spreadsheets. And this part alone could easily take up a whole day for a trust that has a decent investment portfolio. From there, accountants are manually creating journal entries to prepare the trust financial statements, where MYOB and Xero lead the pack, before they go back to Excel to prepare the tax accounting reconciliation and the tax return. And that tax return is often, again, done on a different system. On top of this, you also have the April to June period for the trustee resolution, for which there is a critical requirement to have access to up-to-date information to make informed decisions around distribution strategies before the end of the financial year. The inefficient and disjointed processes and the decline in number for new SMSF clients are by no means the only challenge facing accounting practices. Revenue is already under pressure as traditional compliance services have been largely automated by cloud-based technologies. This includes moves by the ATO to increasingly automate tax return lodgement for individuals, as well as widespread uptake among business owners of tools like Xero and MYOB. But automating routine administrative tasks is giving accountants more time to interact with clients, and they can focus on activities higher up the value chain that reinforce their role as a trusted business advisor. Clients are now seeking out practitioners who offer a proactive and engaged relationship rather than a functional reactive approach to the accounting task. Never has this been clearer than during COVID-19, with accountants reporting that the current climate has seen clients turn to them for support in ever greater numbers. This includes help for business owners in managing their costs and cash flow and debt in this stressed economy, as well as providing support for access to the government stimulus. As accountants see their business models tested, it makes sense to look for new ways to generate sustainable revenue. Clients looking for a smart, solution-focused service are also driving the accountant to demonstrate greater value in their offer in the form of strategic, business, tax, and financial management advice. In this context, a well-run investment trust service is emerging as a prime opportunity to address these challenges. So now, introducing Class Trust, an industry-first solution for trust administration. It's powered by Class and replicates the award-winning features of Class Super for SMSF administration. Class Trust is designed to help accountants and advisors deliver the same efficiencies for trust administration. Class Trust can rapidly drive business efficiencies, solve that disjointed manual process, and it finally delivers a genuine trust accounting solution that's for accountants. With over 200 data feeds and automated investment valuations, automated income and capital gains, and the easy processing of both the simple and complex corporate actions, which are already driving significant efficiencies for SMSF administration, these can now do the same for trusts. And the ability to easily access up-to-date information on any income or capital gains throughout the year. It enables accountants and advisors to make real-time informed decisions for key strategic and time-critical events like the preparation of the trustee resolution. At a high level, on top of this core wealth accounting functionality that Class provides, Class Trust has sophisticated financial statements for trust entities, which can be generated on demand and customized to a firm's needs. We've also simplified the complexities around the compliance on what a trust can and cannot distribute as part of the distribution to the beneficiaries or unit holders. And lastly, the comprehensive tax reconciliation reporting will give you all the data you need to finalize the trust tax return. Class Trust will help standardize processes, reduce the risk of errors, automate those routine admin tasks, and it gives the accountant more opportunities for strategic advice throughout the year and really creates that foundation for a compelling and scalable service. So let's have a look at some of the key features in more detail. With the trust financials, you have the flexibility, of course, to customize it and brand it to your firm, but you can also elect to carry the assets at book cost or at market value for a specific trust. In addition to that, you can also select how you want to account for the unpaid present entitlements and have these on the balance sheet as either equity or liability. Class Trust supports both discretionary and unitized trust. For the unitized trust, it allows you to record and track the contributed unit quantity and contributed unit capital, and it automates distribution for fixed unit trust based on the number of units held as at 30 June. You can also set up the beneficiaries of the trust, and they can be either an individual or a corporate beneficiary. For property trusts, Class provides automated depreciation schedules and free property valuation for residential properties. And since the launch of Class Trust, we have seen firms moving a lot of their property trusts that are related to an SMSF to Class to allow the admin and accounting for both the property trust and the SMSF to be done together on the one system. For the beneficiary distribution, there's also a lot of automation with the transfers to the reserves. If there are any capital losses for the period, which obviously can't form part of the distribution, Class will automatically journal these to the capital losses reserve and disregard them from the amount available for distribution. And if there's a capital gain in the following year, Class will know the relevant amount it needs to auto journal out of the reserve and again adjust the amount available for distribution. The asset revaluation reserve will enable accountants to take full advantage of Class's market value capability, as any unrealized gains are automatically transferred to the revaluation reserve without any manual calculations required by the accountants. There's also an income definition reserve to provide full flexibility for any trust income definitions that may be in the trust deed. Last but not least are the comprehensive tax reports that are available, including a tax accounting reconciliation report, which reconciles the net accounting profit back to the trust's taxable income, a statement of net income report, which provides a reconciliation of all the figures for the trust tax return and provides a breakdown of all of the transactions that affect each figure and the relevant trust tax return label. Last is a statement of distribution report, which provides a breakup of each beneficiary's tax components required for the statement of distribution section in the trust tax return. Now, as Class Trust was only recently launched, there are obviously many more great features still in the pipeline, so please continue to watch this space. If we now have a look at our current complete product set from an end customer perspective, you can see how our offering of accounting technology, wealth technology, and regulatory technology, they come together, and why Class Trust is an integral part in our commitment to simplify and automate the accountant's back office, and how it adds to the complete picture of a client's wealth and investment holdings, and how it will logically connect with our NowInfinity products. With the combination of Class Trust and NowInfinity, accountants can achieve everything from trust establishment all the way through to the creation of financial statements and tax reporting, and they can access any other legal documents associated with trusts, such as deed updates and the trustee resolution. So to wrap up this presentation, I just wanted to share some of the things that our customers are already saying about Class Trust and how it has helped their firm. There is a clear potential for investment trusts to become a significant source of revenue for accounting firms. And what is also evident is that many accounting businesses are currently struggling with the trust administration tasks to do them efficiently and profitably due to their use of Excel spreadsheets. With an automated trust administration system like Class Trust, there's an opportunity for accounting firms to increase the number of trusts that they manage for clients without the need of having to expand their team. They can standardize their processes, remove the risk of errors. This will drive more revenue for accounting firms, and they'll be able to handle a higher volume of trusts. For practices that charge a fee for service rather than the hourly rates, there are additional gains to be made because the profit margin increases for each trust that they administer. And accountants will be able to finally build that compelling and scalable service. Thank you for joining me today. For more details on any of the Class products or sessions, please visit class.com.au or contact the sales team using sales@class.com.au. You can also request a full demo of the Class Trust product.